So I'm going to demonstrate LIFO one more time just to kind of put it on perspective and see how you can do it. There's plenty of videos and material I've posted, but this is one last demo. Hopefully click it in. So I posted some LIFO video examples in the module. So if you open that up, we will then go through it and you will see how it works. So this first transaction is September 2nd, purchased 10 units for $50 each. This is pretty simple. So you're buying inventory. So inventory goes up. Inventory is an asset, so if that goes up, it is a debit. $50 each, 10 units is $500. And since it doesn't say we bought it on account, we'll just say it was cash. So cash is going down, $500. But really what this means, and this is what I'm going to show you, we go here and we create an inventory tracking sheet. On 9/2, we bought 10 units for $50. So let's just write them down. 50, 50, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have in inventory $500. Okay? Real simple. That's basically what we did. We just broke it down. That's what's in our inventory. Okay? The next transaction says we purchased 5 units on the 4th for $60 each. So that one is really simple. We're just going to copy this here. 5 times 60 is $300. So we'll put in 300. And we'll go back to over here and we'll do 9/4. We have 5 units at $60 each. And our inventory goes up $300. So right now our balance in inventory on 9/4 is $800. Okay? If you look at the 5th, it said we sold 8 units to XYZ for $100 each on account. So on September 5th, 9/5, 8 units need to go to XYZ. 8 units. Well, this company is LIFO. LIFO, it means last in, first out. Okay? So we go back. We need 8 units. Well, last in were these ones on 9/4. So we need 8 units total. On 9/4, I have 5. So I'm going to go back on 9/8, and I'm start to fill this order. But I need 8 units total. I've gave them 5. So I need to find 3 more units. So I'm going to go back into my inventory. I'm no more here. So go back to the other ones in. I have 10 here to choose from. So I'm going to take 3 of those from there. So as you see, I have 8 units now. 5 at 60, 3 at 50. I go back. I'm going to cancel out all these units because they're gone. And I'm going to cancel out 3 of these. So the amount of inventory that is leaving me is the 300 plus 150, or 450 total. 450 is coming out of inventory. 300 here, 150 here, 450 is coming out of inventory. So if I go down here, in order to show inventory leaving, I have to do $450 out. And my balance in inventory then is $350. Which, if you look up here, 1, 2, 50, 100, 150, 200, 250, 300, 350. That's what's left. Shows what's in inventory. So now, how do we journalize that? Well, let's go here. For any time you sell inventory, you always will have two transactions. One for the revenue, one for the expense. Let's do the expense first since we just did that. The expense is always going to be a debit to cost of goods sold for the amount or the value of the inventory you're selling. In this case, it was the $450. And then the credit will always be to inventory. Again, when you're selling inventory, two transactions. Let me spell inventory right. It's always going to be the expense side and the revenue side. The expense will always be a debit to cost of goods sold, a credit to inventory, and the amount is based off of how you track your inventory. In this case, we do LIFO. So it's the cost of the inventory in the LIFO. The other side's the easier side. It's the revenue. The revenue will always be a debit to either cash or accounts receivable. In this case, they bought it on account, so it's accounts receivable. And it's 8 times 100, or $800. And the credit for the revenue will always be to sales revenue. $800. Okay? That's how you do inventory. A sale of inventory is always the expense side, which is always a debit to cost of goods sold, a credit to inventory, and a revenue side, which is either a debit to accounts receivable or cash, and a credit to sales revenue. Here we have a situation on the 7th where XYZ called and said one of the units were scratched. We gave a $25 allowance on that unit. So essentially what happened here is the customer called, they don't want to return the unit, but they weren't satisfied that there was a scratch. They're going to deal with it. So they just want to get some money off. Well, how did they pay us? They paid us with accounts receivable. So now, instead of owing the $800, we're going to give them allowance, $25, so they'll only owe us $775. From the videos, hopefully you saw, in order to do an allowance, you do a debit to sales returns and allowances. And it's going to be for the $25. And since we're telling them they owe us less, we're going to credit their accounts receivable. $25. Now what do we have? On the 10th, they paid us. Okay? So let's take a look at this. So on 9/5, we had a debit to AR, or accounts receivable, for $800. On 9/7, we gave an allowance of $25, which shows a credit. On 9/10, hopefully you realize they owe us $775. Okay? But we have to look up. If you go back to the 9/5 transaction, we see that we have this discount period. The terms are if they pay within 10 days, we'll give them a 2% discount. 10-day payment, 2% discount. If they don't pay in 10 days, it's due in 30 days, no discount. Okay? So this was on the 5th. They're paying us on the 10th. That's within the 10 days. So we take the $775 times that by 0.02. Let's see if we can pull a calculator up real fast to get out how much that is. It should be $15, but let's just double check. It's going to be a little bit more. Let's see. 775 times 2%. Yep. Times 2%. 1550. So we owe them in discount. So $15.50 in sales discount. Okay? However, they're going to pay us off. So when they're paying us, we know we're going to get cash. So cash is going to go up. Okay? So we know that's a debit. We also know from up here, this balance is $775. They're paying it off. So we have to credit $775. All right? So let's do up here, $15.50. Let's clear that. Remember that. If I have $775, and I'm going to subtract out 15.5, that's the discount, they're going to pay us in cash $759.50. So let's show how that looks. So we know cash is going to go up in the amount of $759.50. We also have to record the discount. So that's going to be a debit to sales discount of $15.50. And what did this do? It paid off their accounts receivable. Of $775. Hopefully this helped. If you need anything, let me know.